Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save you a little bit of money here. My job is not just to entertain, but to educate and teach. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. We're in one of those critical moments where everyone's asking themselves the same thing. What the heck do I need to own any stocks for? Unless you own tons of oil stocks, a fertilizer stock, and a couple of chemical companies, you're getting a real beatdown. We may not be far from the all-time highs, but let's face it, many stocks are down gigantically, and more important, they could have a lot more downside if the war continues. So on a day where the Dow tumbled 739 points, the S&P plunged 1.52%, and the Nasdaq plummeted 1.78% in response to soaring oil prices brought on by the war, we have to figure out why owning stocks at this very moment makes any sense at all. I do have a couple of good reasons, I think. First reason, trust me, everyone else is thinking just like you. They can't imagine a way out now that Iran has decided that oil should go to $200 a barrel, and they should profit from it because they can block the Strait of Hormuz by lobbing projectiles at ships from non-friendly countries. They're using cheap drones to target the oil infrastructure of the Gulf monarchies. These oil facilities and refineries are gigantic, and they were not built hardened. They're totally vulnerable. We know that the Iranians have many more drones than the Allies have anti-drone systems, and they don't seem to care about making new enemies. These drones are not manufactured in huge factories and aren't easily found. So oil at $200, only they can benefit from it. The strait is closed to all traffic but theirs. Could there be a better situation for Iran? Plus, time is on their side. The longer this takes, the more money they make, as long as they keep launching drones. The only thing they can't do is build nuclear weapons. But who needs nuclear weapons when their conventional weapons are now taking the entire globe hostage economically? I just listed the complete list of what everyone knows. It seems like a list that would scare anyone out of the market. It's enough to make most hedge funds short the market, especially the funds that haven't had a chance to make money from the oils and are exposed to withering criticism from their clients. So what good does it do right now to bet against the crowd? I actually think it's an advantage, because the lower the market goes, the more oversold it gets. It's already at minus 7.5 on the S&P oscillator I follow, something pretty darn rare in the last few years. The more susceptible we are to an awesome snapback, especially if everyone's thinking the same thing. Consider this. Do you think that President Trump doesn't know this parade of horribles? I admit that this war wasn't planned well, but at this point, the situation's obvious. Do you think he wants a bear market on his hands? Remember, when he said the war was almost over, that did turn around the averages. Trump's pattern has been pretty clear in this presidency. He's willing to make hard choices that could send the market down, but if it gets hit too hard, he's also willing to change plans, demonstrate flexibility, like he did with the tariffs after the Liberation Day meltdown last year. That means there could be a deal. Maybe it goes like this: a back channel, perhaps through Qatar, which had been somewhat friendly with Iran. It could give the president a chance to claim a win. If Iran stops attacking the oil infrastructure and lets ships go through the Strait of Hormuz, in return, we stop our bombing, although it starts again if Iran's perceived to be building a nuclear weapon. That works. President Trump, having degraded Iran as an adventurous military power, could declare victory, and oil would plummet so fast that it would make you wish that you even borrowed money to buy stocks, something I officially do not like. He wants the war to be over at this point. He just needs a fig leaf that will let him claim he's quietly working behind the scenes to reopen the strait. You know what? That could be enough. Unfortunately, the Iranians don't seem willing to negotiate here. In fairness, they've got a new supreme leader, and he is vengeful. But if Iran's not willing to make a deal, is there anything our government can do about it aside from accepting permanently higher oil prices? Understand, I want this solved diplomatically. I do not support a military solution that would cause mass destruction and casualties of innocent Iranians. I would hate to see another Operation Linebacker for Iran. But when I listen to the rhetoric from Secretary of Defense Hegseth, he's certainly channeling the spirit of Richard Nixon. And I can't say that Trump will rule it out. If the Iranians won't negotiate, the only way the president can reopen the strait is through dramatic escalation. And I think that's going to get really ugly and bad. Nobody should want that. I know I sure don't. Still, I'm not a military strategist. I'm a stock strategist. And what I know is that sooner or later, this war will end. We don't know when. We don't know how. But at some point, it'll be over. And you'll most likely lose money if you don't own any stocks ahead of the ceasefire. There are some random non-oil stocks that are going up here, sure. Not enough, though, to stem the pain. That said, can you imagine how you'll feel if you're not in the market when the war comes to an end and the price of oil comes crashing down and stocks go shooting up? Look, it would be amazing if you could sell everything today, right now, avoid the pain you'll most likely experience in the coming days, and then get back in the day before the war ends. That would be ideal. But we have no idea when the war is going to end. Hey, maybe someone in the White House could do it if they're willing to fully embrace insider trading, which is still illegal no matter who does it. But for the rest of us, we're fumbling in the dark. I don't like that. Let me give you one more thought. It's true that if oil goes much higher, we're going to start experiencing a lot of pain in this country. But not so serious as the pain of what happened in 2007 to 2009, the Great Recession, despite what I've heard from many different commentators. A run to $140 a barrel takes us up to about $1 more at the pump than we are now. Okay, not great, obviously. However, it can be withstood. We're not facing something that would require a huge fix here. Our economy will take a real beating, true, if oil goes to $200, but that's, well, it's still not an existential threat. Despite what you've been hearing from the endless naysayers, the financial crisis was much worse than this. And if you stayed in the market from 2000 to 2007, 2009, do you know that you ultimately worked your way back to even in 5 years? Okay, not great again, but once you got back to even, it was spectacular. And again, even if you account for the blow-up in private credit, nothing we're seeing now is as bad as what we went through back then. So let's stay in. Here's the bottom line. Even if the current situation is terrifying, remember that under almost all circumstances, it makes sense to stick with the market. If only because you'll have a better chance to make back your losses once peace breaks out. And it will. Believe me, you'll be kicking yourself if you sell everything, and then you will have to watch this market rebound without you. And there are so many good things that are going to happen. The rebound could be tremendous. Let's go to Bill in New Jersey. Bill.
Hey, Jim, booyah.
Booyah, Bill, how are you?
Right to the point. I got 1,500 shares of Pepsi I bought in 2008 for $40. You know where it's at today, about 160. I want to know if it's what's going on with them. Is it time to get out? Because
no. First of all, Bill, thank you for this call. And this is at the crux of what I'm talking about. I don't want people selling good stocks because of short-term concerns. You get a 3.5% yield. You've got CEO Raymond Laguarta, who's doing a terrific job. You've got the best food beverage play. I don't want you selling. Now let's go to Miguel in Massachusetts. Miguel.
Hi, Jim. How are you?
I am good, Miguel. How are you?
Pretty good. Progressive Insurance. Is that a buy, a hold, or a sell?
I'm not a big believer in in this insurance companies, particularly in that particular way. Hey, listen, if you want to own an insurance company, go own Berkshire Hathaway. They've got Geico. It's a much better diversified way to be involved in insurance. And Chubb is a better company, too, if you want to put that out there. Let's go to Duane in California. Duane.
Hi there, Mr. Cramer. Long-time listener, first-time caller.
Excellent.
Love your show. My question is in regards to BAC, Bank of America. What do you think?
Okay, I think Bank of America is an excellent bank. I think that the financials right now have taken such a severe decline. Bank of America at 47. Could it go down to 40? Maybe. All the financials are under pressure, in part because of this of Iran, but also because of private credit. I would stick with Bank of America. That's the kind of company at 10 times earnings that I think is going to give you a long-term good return. Think longer term. You must do that. Let's go to Ian in Florida, please. Ian.
Booyah, Jim. How you doing?
I am doing well, Ian. How are you?
I'm doing excellent. Thank you. Long-time listener, happy club member, of course.
Oh, excellent. Thank you.
Jim, I wanted to ask you about a semiconductor stock that I think has a tremendous, great CEO, really love her, and is arguably, in the second to NVIDIA, the best in the industry. What do you think about getting into some AMD here?
All right. Now, this is very interesting because because we own such a big position in NVIDIA, I don't want to own its biggest competitor, which is AMD. But you know what? If I didn't own NVIDIA, I most certainly would. It is a dogfight, and Lisa Su is fabulous. And thank you for the kind words. Now, even if this current situation is terrifying, remember that under almost all circumstances, almost all, it always makes sense to stick with the stock market and not try to get out and then get back in. It's too hard. Mad Money tonight. A new company that's got NVIDIA's blessing is joining the S&P 500 soon. I'm sitting down with the CEO of Momentum, wow, and finding out more about his company in the space. Then drones have fundamentally changed warfare as we know it. So how is Shield AI playing its part? I'm finding out with the CEO. And when turbulence hits the tape, I like to turn to the experts and pick their brains. Don't miss my conversation with the formidable former CEO of Goldman Sachs, Lloyd Blankfein. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.